The dollar under pressure ahead of that big Fed decision that Tyler just mentioned. Brian Stutland, despite that move lower, the dollar is still trading near its highs of the year. So how do you think the Fed talk today impacts that dollar rally?
Well, it is near the highs, Dom, and it's in this tight little wedge range that's going on with the chart. If you look at some of the technicals, right now that wedge is tightening up at 97 on the high side, 96 on the low side. I think when we get a Fed decision later this afternoon, that's going to start to break out from that little wedge formation and move one way or the other. So this is a critical meeting where they're going to take steps going forward, if they're going to ease off the pedal on rate hikes or if they're going to continue with maybe one or two more in 2019. If we have a couple more rate hikes down the pipeline, the dollar probably goes to 100. Otherwise, maybe we fall back down to the 92, 93, and that's when we start to get the big exporters, the ones that rely on soft sort of dollar in the Dow Jones and the S&P 500. Those companies will benefit. Maybe that's a kickstart for the market to sort of turn itself around and go up again.
All right, Anthony Grisanti, Brian Stutland just mentioned some levels. What levels are you watching with that dollar and the dollar index?
Dom, I got the support right below the lows of the day at 95.92. My resistance is the 50-day moving average, which is 96.42. So he's right. We're in a very tight range right now. But I think the Fed will raise rates when they meet later on this afternoon. I think it's going to be a very dovish hike, one with flowers and candy attached to it. And I think that the dollar movement today is foretelling what could happen in 2019, that they won't be so aggressive right now. With that being said, though, I think with the problems in Europe, with Brexit and things like that, our dollar should outperform their currencies. So I'm looking to buy this little dip right here.